Namaste, good morning. I hope the gap is only to ensure that all of you get the material. I know some of you are yet to get. Yesterday, Jakruti texted me saying that she gave me the address, but she is yet to receive it. And I also think couple of others also said that they are not yet got the material. Let's wait for the day that today, hopefully, you will get the material today. If you are not getting the material by this evening, please let me know. I will check. Hopefully today all of you should get your material and there shouldn't be a problem. So friends, we are in the first chapter. The chapter is divided into two: residential status and scope of total income. We saw residential status. We understood how that needs to be computed and walked into scope of total income. For a RO or global income, wherever he earns, however he earns, it becomes taxable. For a RNOR, any income earned outside India, received outside India is not at all taxable. All other incomes are taxable. For a NR, any income earned outside India, received outside India, and also business or profession outside India, managed from India because he is there for lesser number of days, okay, it is not taxable. So in other words, for a NR, whatever is received or accrued, either the receive rule or the source rule, if it is present, it is taxable. Otherwise, it is not taxable. For an NR also. For an NR also, it is not taxable. So we just started and we understood bringing it into India is not the taxable event. Income earning event is only the taxable event. Past untaxed profit, these words we know how to ignore it. How to ignore it. And we are in question number 3 in page number 21. We are in, for those who get the material, please start. We are in question number 3, page number 21. Vinod furnishes the following particulars of his income earned during the previous year relevant to the assessment year 2021. Interest on German development bonds, 2/5 received in India. Income from agricultural in Bangladesh received there, but later on 50,000 is remitted in India. Income from property in Canada received there. Income from business in Uganda, which is controlled from India, 15,000 received in India. Dividend paid by a foreign company but received in India on April 10, 2019. Please change it to 2019. April 10, 2019. Please change it to 2019. Past untaxed profit brought into India. Profit from a business in Madras managed from outside India. Profit from sale of building in India but received in Sri Lanka. Pension from a foreign employer, former employer in India, received outside India. Gift in foreign currency. Gift is also an income, my dear friend. Gift in foreign currency from a friend received in India. Find out the gross total income of Vinod in different residential status. That is, if he is a ROR, RMOR, NR. Start attempting. Start attempting, my dear friends. Start attempting. How many of you have not received the material? Jakruti, I know that you have not received.
Sir,
My name?
Aditi, sir.
Vidya.
Aditi, Vidya, yeah, you told me that you have not received. Yeah.
Yes, sir.
Yeah.
Yes.
I didn't receive. Aishwarya Lakshmi.
Aishwarya Lakshmi.
Yes, sir. Sir, Rahul.
Rahul,
Sneha, sir.
Sneha,
Sanjay, sir.
Sanjay. Majority of you are in Chennai,
Sanjay.
right?
Sir, Sitaram.
Yes, sir.
I don't know how Chennai you have not yet received, because Chennai should have been delivered on Saturday itself. But anyhow, today I will check. Today I will check. Are you using your
Sir,
mobile?
Agastya.
Huh?
Agastya, sir.
Agastya. Okay. Yeah, you also texted me. I remember. Are you using your mobile, friends, for the class purpose
Yes,
or
sir.
laptop?
Mobile, sir.
Okay. Because if I put it in Google Drive, can you pick it up?
Yes, sir.
In our Google
Sir.
Classroom, can I upload this material?
Yes, sir.
Yes, sir.
Sir.
Interest on German development bonds, my dear friends, 60,000 is the total interest, 2/5 is received in India. For an ROR, entire 60,000 is taxable. For an RNOR and ENR, whatever is received in India is only taxable. Whatever is received in India is only taxable. Income from agriculture in Bangladesh received there. That's enough. Okay. Only for ROR, the full 1,81,000 is taxable. Only for ROR, full 1,81,000 is taxable. Income from property in Canada received there. Okay, I don't mind how he spends it. Interest in property in Canada received there is, my dear friends, 86,000. 86,000. Income from business outside India, which is managed from India. This is normally taxable for ROR, RNOR. Income from business in Canada, in Uganda, outside India, which is managed from India, normally fully taxable for ROR, RNOR. And for NR, it is normally not taxable, but since 15,000 is received in India, that becomes taxable. Since 15,000 is received in India, that becomes taxable in India. Dividend from a foreign company but received in India, taxable for all cases. First untaxed is never a taxable event. Profit from a business in Madras, that's sufficient. Profit on sale of building in India. Pension from a former employer in India. Gift in foreign currency from a friend received in India. Any doubts, please ask me.
Sir,
Go ahead.
sir, dowry income இல்ல அப்படின்னு சொன்னீங்க. அப்புறம் gift மட்டும் எப்படி சார் income ஆ இருக்கும்?
Gift பத்தி நான் பேசுறேன் ராஜா. When I am coming to that particular chapter, I'll speak about it. As of now, I know you understand. I'll tell you at that time this question I'll remember and answer that also. Somebody else was also asking me something. ஆனா படவா தப்பான விஷயத்தை ஞாபகம் வச்சுட்டு இருக்க, அதையும் ஞாபகம் வச்சுக்கோ. Question number 4 in page number 22. Question number 4 in page number 22. The question is yours. The question is completely yours. Read the question and answer the question. Read the question and answer the question. I hope you can download it from Google.
I'm also getting the same answer.
Okay, Bharati. Shall I go to the answers or you want me to wait, friends? Ask me if you have a doubt. Ask me if you have a doubt.
Sir,
Go ahead.
that 50,000 deposit in Indian bank at London, sir.
Yeah.
It is deemed to be received in India, sir.
No. Indian bank can always, inga kuda City Bank irukku, American Express Bank irukku. If you receive it in India, you can deposit it anywhere. It is not received in India. It is not deemed to be received in India.
ஓகே சார், அப்போ ஒரு யூஎஸ் சிட்டிசன் இந்தியாவில் டூருக்கு வரும்போது அவனோட யூஎஸ் பேங்க் அக்கௌண்ட்ல கிரெடிட் ஆனா கூட அது ரிசீவ்ட் இன் இந்தியான்னு அர்த்தமாகுமா?
US bank account of the branch in India வா?
இல்ல சார், அங்கதான் இருக்கு.
அப்ப it is not. It is not. It is not. இப்போ ஸ்டேட் பேங்க் ஆஃப் இந்தியா இருக்கு ராஜா. ஸ்டேட் பேங்க் ஆஃப் இந்தியா has branch all over the world. So if it is credited outside India, not a problem. Just because it is State Bank of India, it doesn't mean it is received in India.
Okay.
This rule applies for a foreign bank also, no sir?
Foreign bank handling an Indian branch also, this rules apply. Place of receipt is the place where the branch is located and not the place of where the bank is incorporated or the bank is functioning head office. That is not.
Sir, services, can you explain, sir?
One more.
Fees for technical services.
For rendered in India. Fees for technical services rendered in India. That is enough. It is an Indian income.
Okay, sir.
So if an income accrues outside India and received outside India, but it is used in India, it is taxable by
No usage is not a question at all. If it is accrued outside India, received outside India, taxable only for ROR, not for RNOR and NR. After receiving the money, he can do anything with that money.
Okay, sir. But used for a business in India is taxable, sir.
Yeah. Used for the purpose of business in India, using that you generate income, that is taxable.
Okay. So, but then if they bring any capital from there, then everything is taxable.
It is not taxable. Capital is not taxable. Only income is taxable. 1 lakh, somebody is investing from outside India into India. That is not taxable. Using that 1 lakh, he is earning 10,000. That is only taxable.
Okay.
Sir, that last adjustment, royalty for usage of it in India.
Yeah. Royalty, I told you the other day itself the example. If you are using the brand name Coke, for every bottle you are paying 1 rupee royalty to Coca-Cola International. So it is taxable in India because it is given for the purpose of using that brand name in India.
Yes, sir.
So the third last adjustment.
Once more.
Third last one. Interest on money lent to resident Indian.
Interest, you mean the third one, UK development bonds, or from the last it is third? Interest received in London on money lent to a resident in India and the money was used in India. The same principle. The same principle.
Sir, I have a doubt in the previous sum.
Go ahead.
The educational expenses of ex's daughter in USA இருக்குல்ல sir. அதுக்கு பதிலா in India இருந்தா will it be taxable?
No. That is not at all. That after where is he earning, where is he receiving? How he is spending is never an issue. Where he is earning, where he is spending. These two are the criteria.
Okay, sir.
question number 5. We have seen it once, so I'm directly starting to answer. We'll answer along. Question number 5. Steve Waugh, a national of Australia, received the following fees for technical services during the financial year 1920. Okay, and at the bottom of the question, compute the taxable income of Steve Waugh for AY, assuming that he has come for the first time and stayed for just 181 days. So he is a non-resident. So directly the question is only for non-resident. Computation of income of Steve Waugh, a non-resident, for the financial year 1920. From BCCI, we all know it is taxable 1 lakh. 1 lakh. From ACB, Australian Cricket Board, India cannot tax it provided we assume that it is not received in India, not taxable. From Harsha Bogle, a resident of India, services has been utilized for earning income in India. From Harsha Bogle, resident Indian. Okay, from Harsha Bogle, 40,000. From Harsha Bogle, resident Indian, that itself is sufficient. Where services are rendered is never a problem as far as a resident Indian is concerned. As far as a resident Indian is concerned, it will become taxable because for the resident Indian, it is an Indian expense, so it becomes an Indian income. From Greg Chappell, a non-resident, for services of business carried out in India. Shruti and Smriti are sisters and they following income during the previous year. Shruti is settled in the state of California, America since 2008 and visits India for a month every year, non-resident. Smriti is settled in Haridwar. So, Shruti is a non-resident, Smriti is a resident. Repeating, Shruti is a non-resident because she is settled outside India from 2008 and only comes for 30 days or 31 days to India. Smriti is fully in India, so she is a resident. So she is a resident. Your time starts now.
Sir,
What is your question?
sir, on the third adjustment, sir, income from house property in USA, அது வந்து இந்தியால தானே சார் ரிசீவ் பண்றாங்க.
Income from house property in USA deposited in
To a mother in India, sir, through banking,
deposited
sir.
in
Deposit Citibank.
USA.
Full up,
However, this is
which means
rent is
the
remitted to her mother. That is inward remittance. After receiving, she is sending it to her mother. That is not received in India.
Sir, so the income for business in Pune, Shruti receives only 50%, no, sir.
Income from business in Pune, the whole income is India. It is not on receipt, it is on source. The source of business income is in India.
Okay.
Sir,
Go ahead.
caste untaxed profits, is that remittance?
Yeah, it is a remittance.
Okay, sir.
So why is gift taxable, sir?
We'll talk about it. Don't worry. I hope you understood it. Go ahead and complete the Talivar question to complete this chapter. Go ahead, please. Same answer, Bharti.
Yes, sir.
If you want me to wait, I'll wait. Otherwise, I'll go for the solution. If you have a different answer, let me know. Or if you don't understand anything, ask me. I hope you're clear.
Sir,
Go ahead.
so what was the explanation you gave for untaxed profits, sir?
Friend, that is not the income of the financial year 1920. It is past income, so don't worry about it.
Okay.
So, friends, with regard to this particular chapter, the guiding principle for us is where the income is received, how the income is, where the income is accruing. Two conditions only determine scope of total income: where it accrues, where it is received. If you are able to understand that and you are through with that, where the income is accruing, where it is received, if you are able to understand, you are through with it. So please practice it. I will give you if possible additional practice questions also. Please practice. That will be able, you will be able to answer this chapter easily. That will enable you to answer this chapter easily. So this chapter is about residential status and scope of total income. Okay, so that is the introduction part of or the first part of our chapter, divided into two arenas: RS on one side and scope of total income on the other side. I hope the class is clear how to compute both. Okay, if you rework these questions itself, you will get more confidence on this particular chapter. Just stay on a minute. Just stay on a minute. I will redo the Excel entirely. Just stay on a minute. Friends, back to your theory notebook. Back to your theory notebooks, please. The first of the chapters of income, the first of the chapter of income, okay, income from salaries, income from salaries, okay, section 15 to 17, section 15 to 17, okay, income from salaries, section 15 to 17. My dear friends, a company or an organization makes various types of payment. A company or an organization makes various types of payment. It pays to their auditors, lawyers, etc. It pays to their intermediaries. It pays to their agents. When you say when it is paid to auditors, lawyers, you call it as fees. When it is paid to intermediary, we call it as brokerage. When it is paid to agents, we call it as commission. Only one type of payment is known as salaries. That is when it is paid to the employees of the organization. When it is paid to the employees of the organization, we call it as salaries. We call it as salaries. So, my dear friends, what is this terminology salary, or how does salary comes into play? To tax an income under this head, the relationship between the payer and the receiver should be of employer and employee. To tax an income under this head, my dear friends, the relationship between the payer and the receiver should be that of employer-employee. It is similar to master-servant relationship. Okay, it is similar to master-servant relationship. So one person is able to command and the other person has to abide by that command. Other person has to abide by that command. So between the payer and the receiver, only if there is master-servant relationship, employer-employee relationship, it is taxable under this chapter. Otherwise, I am saying it is not taxable under this chapter. It will be taxable under some other chapter. It will not be taxable here. If this relationship does not subsist, if this relationship does not exist, then I am just saying it is not taxable as salaries. Some other chapter will take care of it. To tax an income under this head between the payer and the receiver, the relationship should be employer-employee relationship, which is similar to that of master-servant relationship. One person is able to command and the other person is adhering or supposed to do it with that particular command. Sneha, can you unmute?
Yes, sir. Yes, sir.
Yeah. Character of so friends, few examples. In your notebook, few examples. Okay. Director of a company. Is the money paid to director of a company, Sneha? For the director, is it salary? Is it taxable as salary?
Yes, sir.
Yes. Definitely yes. There is a master-servant relationship between the company and the director. And also, you have company law restricting its powers, etc. Okay. The remuneration is taxable as salary as the relationship exists. Okay. Director of a company, definitely salary. Sneha,
So,
pension received by the family members after death of an employee. We call it as family pension. We call this term as family pension. Now, tell me, is it taxable under salary?
I think no.
Why?
So,
I assure you, your thinking is right. Now, tell me why. Because who is receiving? Family members. Who is paying? Company. So between them there is no employer-employee relationship. Okay, repeating, my dear friends, the recipient is the family members, maybe wife of the employee, son of the employee, daughter of the employee. The recipient is a family member. The payer is the company. Between the payer and the receiver, the relationship does not exist. And I am never saying that this is not taxable. I am just saying it is not taxable under this chapter. I am not saying it is not at all taxable. No. I am saying it is not taxable under salaries. To tax an income under salary, the relationship should prevail. Otherwise, it will go to some other heads. There are totally 5 heads. Salaries, property, business or profession, capital gains, other sources, which we have written. Okay, so don't worry. It is not taxable. Okay. Is this taxable as salary? Remuneration paid to the judges of Supreme Court and High Court, is it taxable as salaries? I'm sticking on to Sneha.
Yes, sir.
Yeah. Okay. Yes, they are government employees and it is taxable as salary. Remuneration to a partner by the firm. Remuneration to the partner by the firm. Between the firm and the partner, is there an employer-employee relationship? Between the firm and the partner, is there an employer-employee relationship? The answer is no. The answer is no. So it is not taxable under salary. Again, I am not saying it is not at all taxable. I am just saying it is not taxable under salary. I'm just saying it is not taxable under this chapter.
பார்ட்னர்ஷிப் அக்கௌண்ட் சார் salary paid to the partner படிப்போம் சார். அப்போ கூட ரிலேஷன்ஷிப் doesn't exist. ஸோ அது salary கிடையாதா?
எதுரா ராஜா? once more.
பார்ட்னர்ஷிப்ல எல்லாம் salary paid to the partner படிப்போம் சார். அங்க கூட ரிலேஷன்ஷிப் doesn't exist. ஸோ அது கிடையாது.
Doesn't exist. It is not taxable as salary. It is, you can use the same term, salary paid to partner, remuneration paid to partner, but in income tax law, it is not taxable as salary because the relationship does not exist. Some other chapter will come and tax it. Honorarium to MPs and MLAs. Sneha?
Sir, I think no.
Why? தோணித்து சொல்லிட்டேன் சார். Okay. The answer is no, my dear friends, because they are not government employees. Judges of Supreme Court, government employee. Employed in income tax department, government employee. Employed in PWD, government employee. Employed in AGS or DMS or any government employee. army personnel, government employees. MPs and MLAs are not government employees. They are also not known as government servant. They are known as public servant. They are not known as government servant, my dear friends. They are known as public servant. They are supposed to do public service. Okay? They are supposed to do. Okay? So, the payment made by government, the relationship does not prevail. And I am not saying it is not at all taxable. Not taxable under this chapter. Not taxable under this chapter, as the relationship is not existing between them. So my dear friends, to tax an income under this chapter between the payer and the receiver, the relationship should be of employer and employee. One person is able to command and the other person should be abided by the command. Then it will come under this chapter. Otherwise, I am just saying it is not taxable under this chapter. Some other chapter will come and tax it. Section 9. Place of accrual of salary. In the last chapter itself, we spoke about this. Salaries accrues at a place where services are rendered. Salaries accrue at a place where services are rendered. Salary is taxable at a place where you are rendering the services, not the location where you are rendering the services. In case of ambassadors and high commissioners of India, the salary paid to them is taxable in India, even though it is received outside India. Even though it is received outside India, in the case of ambassadors and high commissioners, the salary paid to them is taxable in India, even though it is received outside India. Okay, salary accrues at a place where services are rendered. In case of ambassadors and high commissioners, the salary paid to them is taxable in India, even though it is received outside India. Even though it is received outside India. Okay, categorization. How we are going to study this chapter? Okay, categorization of salaries. For the purpose of this chapter, salary is divided into 5 categories. Salary is divided into 5 categories. For the purpose of this chapter, my dear friends, salaries is divided into 5 categories. General, allowances, perquisites, terminal benefit, profit in lieu of salary. For the purpose of this chapter, we are going to divide salaries into 5 categories and understand. We are going to divide salaries into 5 categories and understand. What are all they? General, allowances, perquisites, terminal benefit, profit in lieu of means in addition to income to profit in lieu of salaries. We are going to divide this chapter into 5 categories: general, allowance, perquisite, terminal benefit, profit in lieu of salary. Okay, we are dividing it into 5 categories and study. Friends, at our inter level, this is the most important chapter because of 2 reasons. One is the simple fact that the largest number of population comes under this chapter. I'm not saying highest in terms of collection, but the largest number of population in terms of numbers, number of people who are falling under this chapter is the highest. You know, if you take TCS as one company, it is a company doing business, but it has close to 5 lakh, 10 lakh employees who are paid salaries, who will be asked to pay taxes under the head salaries. So you can see one company itself, you can manifold and see your parents, your friends, your brothers, all of them will be coming and falling under this chapter. The more and more you understand this chapter, the more and more questions you will be asked. How this is taxable, how well, okay? So the largest population comes and falls in this chapter called salary. That is one reason that this chapter is most important. Second, at final level, there are other very in-depth topic to question. So they don't question much on salary at final level. They stop it with the inter level. In that manner also, this is a very, very important, interesting topic. So in all ways, this topic is going to be of paramount importance to you. So in all ways, this topic is of paramount importance to you. That is why we say we focus more on this particular chapter. So we are going to divide this chapter into 5 and study general, allowance, perquisite, terminal benefits, profit in lieu of salary. We will take up the first category, my dear friends, general. Okay, I'm going into the first category, general. The first item there is basic pay, or it is also known as basic salary. Okay, this is basic pay, or no, which is popularly known as basic salary also. Friends, this is the foundation, fundamental salary. This is the foundation salary upon which all other structures are built. This is the foundation on which all structures are going to be built. When you look into further of the chapter, you will understand this allowance 20% of basic pay, provident fund 12% of basic pay, perquisite 15% of basic pay. All are dependent on this particular concept, this foundation, which is known as basic pay. That is why people will say, If basic pay goes up by 2,000, the overall salary will go up by 5,000 because everything is calculated as a percentage of basic pay. So everything will go up. If the foundation goes up, the building goes up. Like that. So the entire concept here is basic pay. This is the fundamental or foundation salary upon which all other benefits will also be calculated. Okay, this is the fundamental or foundation salary upon which all benefits are going to be calculated. Am I clear to you? Okay, there are two ways of determining basic pay. There are two ways of determining basic pay. Fixed basic pay, a certain sum of money. Fixed basic pay. Your basic pay is 15,000, 20,000, 22,000. A certain sum of money which is known as the basic pay. They will give you okay, basic pay 25,000 per month, which means it's fixed 25,000 every month. Later they might increase to 27, 28, but it is fixed basic pay, a certain sum of money. Grade system of basic pay. Grade system of basic pay. Okay, the second is known as grade system of basic pay. Don't write it now, I will tell you. Okay, this is very popular with government, public sector undertakings, some banks, universities. This is very popular. If somebody joins employment today, they will say like this: 9,000 hyphen 750 hyphen 12,000 hyphen 1,000 hyphen 15,000 hyphen 1,500 hyphen 21,000 hyphen 2,500. If I am joining duty today, they will say that your basic pay is 9,000 hyphen 750 hyphen 12,000 hyphen 1,000 hyphen 15,000 hyphen 1,500. What is this? I am joining at the basic pay of 9,000 per month. Every year my increment will be 750, 9,000 hyphen 750. Next year my basic pay will be 9,750 per month. Second year onwards 10,500 per month. Third year 11,250 till I reach 12,000. Once I reach 12,000, my increment will be 1,000. Till I reach 15,000. Once I reach 15,000, my increment will be 1,500. So, the greatest advantage and disadvantage of this system is you will know the basic pay at the time of retirement when you are joining itself. You will know what will be your basic pay because it is predetermined. Grade system of basic pay where increments are predetermined. At the time of joining itself, I will know that my basic pay is going to be like this. I will get this as increment every year. Once I reach the next level, my increment will increase. Once I reach the next level, So that is why you will see, henceforth you can check, government employees goes on a strike seeking increase of DA, seeking increase of various benefits. They will not go on a strike seeking increase of basic pay. That is predetermined. That is known to you, boss. You know what is the basic pay. So grade system of basic pay. Okay, where increments are predetermined. Where increments are predetermined. That is, at the time of joining itself, you will know what is the basic pay for the years ahead. Any doubts? Ask me. In our practical notebook, go to a fresh page, write the topic chapter heading income from salaries. In our practical notebook, go to a fresh page, write the chapter heading income from salaries. Friends, later, if you want, you can fill it up and keep in this page number 26, the same things which we have discussed, you can fill it up and keep. Friends, this material in your hand, I call it as a book. It has theory, it has practical questions, but the practical questions, the answers are not there in the material. We are going to work. So the theory is there in the material. Okay, a detailed theory is there in the material itself. Okay, it is a long work of various batches which is culminated into this particular material. Okay, right. Sir, when the theory is there in the material itself, why I am dictating, why are you asking us to write? I will make you write. The theory in the material is complementary in nature and not a substitute in nature. You will write the provisions in the classroom in a condensed format. The detailed theory is there in the material. Wherever you are not able to understand, you can study the detailed theory. But otherwise, theory will be written for all the things. Theory will be written in the classroom also. In the classroom also, theory will be written. Apart from this, I am also preparing a small homework material that will be chapter wise posted in the Google Classroom, so that you will be able to answer that also, so that we become more stronger and stronger in this particular chapter. Okay, so the material, whoever has collected it, whoever has received it, okay, please understand that your theory in the material is to just complement. Okay, the same theory is only there. Okay, but I don't want to have the practice of reading the theory. I want you to write the theory, and I'm also going to type the theory, because that gives you more confidence, better understanding than reading the theory. Have the theory, okay, that will be helpful for you. And apart from this material, should I look at anything else? My opinion, no. But as the class goes by, as I told you, if at all necessary, we will see. But as of now, my opinion is you need not look into. The material is very, very comprehensive. Very comprehensive. Okay, for your 60-mark paper, this is a real comprehensive material. Now coming back to question number 1 in page number 45. Okay, question number 1 in page number 45. Mr. Vinayaka joined X Limited on 1/4/2005 in the pay scale of 8,000 hyphen 500 hyphen 12,000 hyphen 750 hyphen 16,500 hyphen 1,000. What will be the basic pay for your year of 1920 for your relevant previous year? Read through. He joined on 1/4/2005. He joined on 1/4/2005 in the pay scale of 8,000 per month. In the pay scale of 8,000 per month. From 1/4/2006, he will get an increment of hyphen 500. His pay will be 8,500 per month. From 1/4/2007, it will be 9,000 per month. Okay, from 1/4/2008, it will be 9,500 per month. Okay, 2009, 10,000 per month. Okay, sorry, 1/4/2009. Okay, 1/4/2010 onwards, 10,500 per month. 11,000 per month. 11,500 per month. 1/4/2013, 12,000 per month. And then the question says 12,000 hyphen 750. After achieving 12,000, his increment from 1/4/2014 will be 12,750. That is, his increment will be 750. 1/4/2015, 13500. 1/4/2016, 14,250. 1/4/2017, 15,000. 1/4/2018, 15,750 per month. 1/4/2019, 16,500 per month. 16,500 per month. From next year onwards, he will get 1,000 as increment. But for us, here it ends. Okay. Therefore, basic salary for the financial year 1920 is 16,500 into 12, my dear friends. Okay, 16,500 into 12 months. Per month, it is per month going to be 1,98,000. I mean 16,500. So 12 months, 1,98,000. 1,98,000. Any doubt, please ask me. So increments are predetermined, okay, by which you can find out what is the basic pay for our previous year. Vyasa was employed in the pay scale of 14,400, 600, 17,400, 800, 21,400, 1,200 with effect from 1/1/2004. What will be is a basic pay for your relevant previous year. For 1920, your time starts now.
Sir,
Taken. Go ahead with your question.
no, sir. Can you show the solution
Yeah,
part of
sure.
one?
From the top, all this is sufficient.
This is fine, sir.
Yeah.
We will calculate increment based on the calendar year, but we have to derive salary for financial year, right?
Perfect.
Okay, sir.
Thank you, friend. That's what Bharati also told. Let's wait. Let's wait for our other friends.
So 330 to 400.
Okay. Any other answers, friends? So, we achieved 27,400 on 1/1/2019. Is that correct?
Yes, sir.
Yes,
Yes,
sir.
sir.
Anybody not getting that? Please let me know. We achieved 27,400 on 1/1/2019, and you should not stop there. You should not stop there. I will tell you some of the ground rules of our classroom, of our tax classroom. Three things which are ground rules. One, we are not in BCom to repeat the same question with a different number. Every question should give us some extra knowledge. So that is one thing always there in my mind. Second, I'm a very lazy person. Okay. So I will do only easy questions. கஷ்டப்பட்டு CA pass பண்ணிட்டேன். So I will only do easy questions, boss. So when I took it, I took an easy date for me, 1/4. When I gave you the question, I gave you a date 1/1. It is not beginning of the year, it is mid of the year date I gave you. And as soon as the question is read, if you remember, if you have recollect, Bharati asked us, sir, should I go by calendar year for increment I said yes, and she said also, I'll go by for increment calendar year, but when it comes to computation of salary, I'll go by financial year. That's the proper understanding you can have. Increment is by calendar year, but computation is by financial year. So I took a easy date, so I got 12 months directly. But when I gave you, I did give you a in-between date. So because some of our friends or one friend of us sold 328 800, some of you might have got that answer taking 27 400 into 12. Why? The third ground rule is, well, I honestly miss meeting you physically in the classroom and talking. Okay, there is a big difference between horses and human beings. Horses can be trained, human beings can be taught. If I take in this road horse 10 times, 11th time it will go and come even if I'm not there, because it always feels I should go up to that, come back. But human beings are having that ability to think, to decipher, etc. So what happened is an horse mentality that poked up. Watson stopped with 1/4/2019. Watson stopped with 19. I will also stop with 19. That is not right. Okay. Watson stopped with 19 because he is a very lazy person and he took a easy date. Okay. I can tell that, not you. Okay. So he took up a easy date, whereas when he gave you, he said 1/1/19, but your year is April 19 to March 20, which is 9 months of April, 9 months of 2019 and 3 months of 20. So you should also do 1/1/20, and then your basic pay will be 3,32,400, which is 27,400 into 9 plus 28,600 into 3. I am very happy majority of you answered it correctly. Now I am ready for your doubts. I hope you are clear. I hope you are understanding. So this is how this has to be calculated. That is 9 months of 2019 plus 3 months of 2020.
So if somebody joins in the mid of the year, also from that date to 12 months is taken?
Yeah, always increment is on a year-to-year basis from the date of join.
Okay.
Back to our theory notebook. Back to our theory notebook, please. So I'm in category 1, general. First is basic pay. Second, okay, bonus. Okay, second, bonus. Raja, back to your theory notebook. The second is bonus, paid during festive occasion. Incentive, paid in appreciation of performance. Incentive, paid in appreciation of performance. Commission, commission, paid / computed as a percentage of profit or turnover. In some circumstances, this might also be a fixed amount. In some circumstances, this might also be a fixed amount. Basic pay, bonus, commission, incentive. Note, all items falling under the general category are fully taxable. All items falling under the general category are completely, fully taxable. All items falling under the general category are fully taxable. Category 2, allowances. Category 2, allowances. Category 2, my dear friends, allowances. What is an allowance? Okay, what is meant by allowance? Please understand, fixed monetary payment for a specific purpose is known as allowance. Repeating, fixed monetary payment for a specific purpose. Fixed monetary payment, that is, the employer pays to the employee a fixed sum of money every month and say use it for this particular purpose. Employer pays 10,000 rupees and says use it for your attire. We call it as uniform allowance. Use it for your use it for your commutation. We call it as transport allowance. Use it for your children education. We call it as children education allowance. Use it for your cost of living. We call it as cost of living or city compensatory allowance, like that. Okay. A fixed sum of money is paid by employer to employee for a specific purpose, earmarked purpose. Okay. Right? Allowances or fixed monetary payments for a specific purpose. Okay? Fixed monetary purpose, and it comes with a direction for a specific purpose. Employer pays a certain sum of money and also specifies how the money can be utilized. So it is for a specific purpose. Fixed sum of money for a specific purpose is known as allowance. Allowances are further divided into fully taxable allowance, fully exempt allowance, partly taxable, partly exempt allowance. Allowances are further divided into three, my dear friends. Fully taxable, fully exempt, partly taxable, partly exempt. Allowances are further divided into fully taxable, fully exempt, a part of the allowance part taxable, another part of the allowance is exempt. Allowances are further divided into fully taxable, fully exempt and partly taxable, partly exempt allowances. So what is allowance? Allowance means fixed sum of money for a specific purpose. Employer pays a certain sum of money and says for what purpose you have to use it. For what purpose you have to use it. Accordingly, I am going to say whether it is fully taxable, fully not taxable. A part of it becomes taxable, another part of it becomes exempt. The first is fully taxable allowances. Whatever is paid is fully taxable. Whatever is provided is fully taxable, my dear friends. Fully taxable allowance. Dearness allowance. Okay, DA. Okay, dearness allowance. This is taxable whether it forms part or not. As it is, write down. DA is taxable, it's fully taxable, my dear friends, whether forms part or not. DA is taxable whether forms part or not. So you understand that there are two types of DA. DA forming part and another one is not forming part. Okay. As of now, you have understood this in a very, very preliminary sense. I know. Please wait as the class goes by, you understand. There are two types of DA, forming part, not forming part. But whether it is forming part or not, that DA is fully taxable. Sir, why should this difference be? You will very soon understand. Very soon, in two classes, you will understand what is this forming part, not forming part. That is more for working note purposes. As of now, understand DA is fully taxable whether forming part or not. City compensatory allowance. CCA. City compensatory allowance. CCA. What is this? My dear friends, you will understand that there are many companies, many organizations which fix the salary based upon the cadre, not based upon person, based upon the level of employment, cadre. A manager will get a salary of 60,000 per month. A manager in Mumbai will also get 60,000 per month. A manager in Madurai will also get 60,000 per month. But we know that the cost of living of Mumbai is much higher than the cost of living of Madurai. So the company will pay what is popularly known as CCA, City Compensatory Allowance. Probably a manager in Mumbai will be paid additionally 10,000 because he has to meet the high cost of living. Okay? Okay.
சார்
Yeah,
ஆனா
Raja.
ஆனா இப்போ கூட அது salary கேட்டகரியில தானே சார் வரும்.
இது salary தான், நான் salary chapterல தான் இருக்கேன்.
ஓகே சார்.
Salary தான் Raja. Okay? So this is paid to meet the high cost of living, okay, which is popularly known as city compensatory allowance. Okay, friends, right? Okay, now I am going to go to the list as such. Either under the explanation is essential. Others you can read the list and understand. Okay, so if you go like this, 1, 2, medical allowance. We all know why it is paid. Okay, medical allowance, entertainment allowance, entertainment allowance. Again, fully, all these are fully taxable allowance. Lunch allowance, servant allowance. Okay, medical allowance, entertainment allowance, lunch allowance, servant allowance, other personal allowances. Other allowances which are for personal purpose of the employee. Okay, other allowances which are of personal purpose for the employee. These are fully taxable. What are all fully taxable? DA, CCA, medical, entertainment, lunch allowance, servant allowance, any other personal allowances are fully taxable allowances. Leave 2-3 lines on safe side. Okay, if at all we find something, we will write it. Partly, fully exempt allowances. Fully exempt. Whatever is paid is completely exempt. Daily allowance paid to High Court and Supreme Court judges. This is for their official duty which is being paid. So daily allowance paid to High Court and Supreme Court judges. Allowances paid outside India for High Commissioner and ambassadors. Allowances paid outside India for High Commissioners and Ambassador. I told you it is accrued in India, but I'm not going to tax it because I know these are paid outside India for them to meet that expenses there. So I provide the deduction, I provide the exemption here. Fully exempt allowances. Purely theoretical, don't worry about fully exempt allowances, just purely theoretical part. Partly taxable, partly exempt allowances. Partly taxable, partly exempt allowances. A part of the allowance is taxable, a part of the allowance is exempt. Out of the total, a part is taxable and the other part is exempt. That is what is partly taxable, partly exempt allowances. We are starting, friends. Okay. Partly taxable, partly exempt allowances. A part of it is taxable, a part of it is exempt. The first and the most important thing this is house rental allowance. Okay, popularly we abbreviate that as HRA, house rental allowance. Popularly it is abbreviated as HRA. Okay, why HRA? Because this is paid to meet the cost of accommodation for an employee. This is paid so that the employee can stay in a house comfortably. Okay, this is paid by employer to an employee to meet cost of accommodation. Okay, this is paid by an employer to an employee to just meet the cost of accommodation, my dear friends. My dear friends, okay. Section 10, subsection 13A. Okay, repeating, section 10, subsection 13A provides exemption for HRA. Say, okay, normally when I say section 10 itself, it speaks about exemption. In income tax law, section 10 stands for exemption. So, section 10, subsection 13A provides exemption for HRA. Exemption is minimum of the following. Exemption is minimum of the following. Exemption is minimum of the following. Actual HRA received. Actual HRA received. Rent paid in excess of 10% of salary. Rent paid in excess of 10% of salary. As a formula, if you write rent paid minus 10% of salary. Okay, rent paid, excess of rent paid over 10% of salary. So nothing but rent paid minus 10% of salary. 50% of salary if the accommodation is in metro cities / 40% of salary in other places. Okay, 50% of salary if the accommodation is in metro and 40% of salary if the accommodation is in other places. Repeating the points. House rent allowance that is paid to meet the cost of accommodation for an employee. Section 10, subsection 13A provides for the exemption for HRA. Exemption is minimum of the following: actual HRA received, or 10% rent paid minus 10% of salary, or 50% of salary if the accommodation is in Delhi, Mumbai, Kolkata, Chennai. Only 4 metros. Others, Bangalore, Ahmedabad, Hyderabad are not yet recognized. So, 50% of salary if the accommodation is in Delhi, Mumbai, Kolkata, Chennai. Otherwise, 40%. If the accommodation is elsewhere, it is 40% of salary. Okay, so minimum of the following means whichever is less is exempt. Amongst the three, whichever is less is exempt. Amongst the three, my dear friends, whichever is less is exempt. That's what the meaning of minimum of the following means. So what are all the conditions? Actual HRA received, rent paid minus 10% of salary, 50% of salary if the accommodation is in Delhi, Mumbai, Kolkata, Chennai, or 40% of salary if the accommodation is in another place. And the most interesting and the one to remember always is wherever inside the section, inside the chapter, if they use the word salary, they will define the term salary. Repeating, chapter heading A, income from salary. But inside the chapter they are using rent paid minus 10% of salary, 50% of salary, 40%. Wherever they use the word salary in a section, they will define what is the meaning of salary. In all the places in our theory notebook, we will write the meaning, put a box and keep so that it catches our attention. Salary means basic pay plus DA forming part plus commission as a fixed percentage of turnover. Salary means basic pay plus DA forming part. I told you there are two types of DA. Here we will take only forming part DA. You will become more clear on this. Don't worry. Plus commission as a fixed percentage of turnover. Put a box for this. Salary means salary is equal to basic pay plus DA within bracket F, which means forming part, plus commission as a fixed percentage of turnover.
Sir,
Go ahead.
exemptions example வச்சு explain பண்றீங்களா சார்?
Rajay, once more your question.
I mean exemptions கொஞ்சம் explain பண்றீங்களா சார் with an example?
I'll explain. Don't worry. I'll explain. You will be absolutely damn clear. Don't worry. Okay. Under this, I write a statement. Even if there is change in one of the factors of computation, then exemption has to be computed on split period basis. Even if there is change in one of the factors of computation, then exemption has to be worked out on split period basis. Please write it down as it is, whatever I have written down. Okay. Please write it down. I will take care of your clarity. Read it once. Read it once. I am going to come back to this.
Sir, I have a doubt.
Go ahead.
Sir, the exemptions that you gave, and like you said, the minimum of the following means whichever is less. So basically,
Yes.
out of three, whichever is less will not be taxable. That was
will be exempt, and the other part will become taxable.
Okay, sir.
Right? Right. Patiently. The first of the partly taxable, partly exempt allowance is house rent allowance, HRA, paid by the employer to an employee to meet the cost of accommodation. What is the amount exempt? There are three categories. Exemption will be whichever is less amongst the three. Actual HRA received, rent paid minus 10% of salary, and we'll come to the definition of salary. 50% of salary if the accommodation is in the 4 cities, or 40% of salary if the accommodation is elsewhere. And salary for this purpose means pay plus DA forming part plus commission as a fixed percentage of turnover, and the law says even if there is a change in one of the factors of computation, work out the exemption on the basis of split period. To your practical notebook. To your practical notebook. I'm looking into the third question in page number 45. Yudhishthira is entitled to a basic salary of 15,000 per month, DA 10,000 per month, 40% forms part, HRA 20,000 per month, actual rent paid 20,000 per month, place of residence Delhi. Calculate HRA exempt and taxable. Patiently. Basic pay 15,000 per month, DA 10,000 out of which 40% forms part, HRA 20,000 per month and the rent is also 20,000 per month. Place of residence Delhi. Calculate exempt and taxable. Patiently. Question number 3, page 45. Always, before start of the working, we should work out the salary and keep. Before start of the working, okay, salary for the purpose of HRA is basic pay plus DA within bracket F means forming part plus commission as a fixed percentage of turnover. So in this question, my dear friends, okay, basic pay is 15,000 per month, 15,000 per month, and the DA forming part is, though the DA is 10,000 per month, only 40% forms part, 4,000 into 12. How I got 40,000? 10,000 into 40% becomes 4,000. Sorry. How I got 4,000 is 10,000 into 40%. So my salary will be 15,000 into 12, the basic pay, and DA 4,000 into 12. So this is my salary. 2,28,000 is my salary. 2,28,000 is my salary. Computation of taxable HRA. Computation of taxable HRA. Okay, computation of taxable HRA. You can listen and then take it down also, not an issue. Rent, okay, sorry. HRA received. How much the company paid? 20,000 into 12, 4 lakh, 2,40,000. 1 minute, friends. I got an HRA of 20,000 per month for 12 months. 20,000 per month for 12 months. Less exempt under section 10 subsection 13A. Less exempt under section 10 subsection 30A. Actual HRA received. Actual HRA received, we all know it is 2,40,000. Actual HRA received 2,40,000, my dear friends. Rent paid minus 10% of salary. Okay, what is the rent paid? The question says actual rent paid 20,000 per month. So 2,40,000 minus, we all know what is salary. We have computed and kept it. Okay, 2,28,000 into 10%. Repeating, rent paid minus 10% of salary. Rent paid, we all know 2 lakh, that is 20,000 to 12. The actual rent paid given in the question itself. Okay, the actual rent paid is given in the question itself. Okay, the question itself says the actual rent paid. So it is 20,000 into 12, 2,40,000 minus, we know what is the salary, 2,28,000, that is into 10%. Okay. Two lakh 17,200. 50% of salary. Why I am taking 50%? Because the place of residence is Delhi. The place of residence is Delhi. So since it is Delhi, it is 50% of salary. Okay, and we all know what is salary. 2,28,000 into 50%. Into 50%. My dear friends, the law says whichever is less amongst these three things is exempt. Whichever is less amongst these three things is exempt. So minimum of the following three things is exempt. That is 1,14,000. Therefore, taxable HRA. Therefore, taxable HRA will be 240 minus 114, 1,26,000. Okay. Total HRA received by me is 2,40,000. Partly taxable, partly exempt. Exempt is 1,14,000. So the taxable is 1,26,000. Any doubts? Ask me. Take it down neatly. Any doubts?
So even sometimes the actual HR received will be the minimum, so fully it will be exempted.
That is, if this is the minimum, then fully exempt. Yes is my answer.
Okay.
I hope you got it. Mr. Bhima resides at Bangalore, drawing a salary of 15,000 per month. He is paid a DA of 2,500 per month, which forms part. He receives HRA of 7,000 per month. He receives commission at the rate of 5% on the total turnover of 40 lakhs. He pays a rent of 7,500 per month. Compute HRA exempt and taxable. Compute HRA exempt and taxable. The question is twice. I'm also getting 35,000. You're getting it? The friend who gave us the answer in the initial level, are you getting it?
Yes, sir. I deducted from the basic pay in that. Yes, sir. That
Yeah,
is it.
okay, got it. Anybody still doing? I'll wait, otherwise I'll progress.
Sir,
Go ahead.
Bangalore is a metro city, right?
In as per general standards, yes, but as per income tax law, the four recognized metros are Delhi, Mumbai, Kolkata, Chennai.
Okay, sir.
Question number 5. Mr. Nakula, residing in Hyderabad, drawing a salary of 12,000 per month, DA forming part 15,000 per month, commission 3% on the turnover of 60 lakhs, HRA 5,000, rent paid 7,500. With effect from 1/1/2020, he is transferred to Chennai for the same benefits. However, in Chennai, he is paying a rent of 10,000 per month. Compute the income HRA exempt and taxable. Read through. So, he was in Hyderabad from April to December, and from January he is moved to a metro city, Chennai. The law says, even if there is a change in one of the factors of computation, what can be the computation factor? HRA computation factor, basic salary computation factor, place of stay computation factor, rent paid computation factor. இது நாலுத்தை பேஸ் பண்ணி தான் exemption. The exemption is based upon 4 factors, my dear friend. What is the HRA received? What is his basic salary or what is his salary? Where is he staying? What is the rent paid? These 3 conditions as such is based upon these 4 factors. What is the HRA? What is the salary? What is the place of stay? And what is the rent paid? Even if there is a change in one of the factors of computation, an exemption has to be worked out before change, after change. Very simple. It's like working 2 questions, but not for 12 months. Before change, what is the exemption? After the change, what is the exemption? That is how we are going to work. The question says, Mr. Nakula is residing in, initially he was residing in Hyderabad, drawing a salary of 12,000 DA, 3% commission, HRA, rent paid, and that is up to April to December. From 1/1/2020, he is transferred to Chennai, and so there is a factor change. April to December, separate working. January to March, separate. Okay. Wherever there is a change, HRA exemption has to be worked out on split of basis. What is split of basis? Before the change, what is the HRA exemption? After the change, what is the HRA exemption? Patiently, we will do it. Don't worry. But it's a simple concept. Okay. Okay, the same question, okay, before change, that is April to December, and the change happened on January to Chennai, January to March. Question number 5 in page number 45. Okay, friends, computation of salary first. Particulars, April to December, January to March, because there is a change. It has to be worked out on split of basis. April to December, what is the salary? January to March, what is the salary? Basic pay. Okay, he was drawing a basic pay of 12,000 in both the places. 12,000 into 9 months. Okay, 12,000 into 3 months. 12,000 into 9 months, April to December, January to March, 12,000 into 3 months. DA forming part, the question itself says 15,000 is the DA and fully forms part 15,000 into 3. Commission. Commission, how much is the commission? 60 lakhs into 3%. 60 lakhs into 3% is the commission. So here it is 60 lakhs into 3% into 9/12. Okay, here it is 60 lakhs into 3% into 3/12. So now I will get salary for the purpose of HRA. Salary for the purpose of HRA, which comes to 3,78,000 and 1,26,000. 3,78,000 and 1,26,000. Any doubt, please ask me. I believe we are following. Okay, right. Now I am coming to computation of HRA, taxable HRA. Same columns remain. Same columns remain. April to December, January to March. Okay, if you want, I will write it again, because we have to do it on split off basis. HRA received, which we will take it as A. The question says 7,000 per month. So 7,000 into 9. Here it is 7,000 into 3. Okay. HRA received 63,000 and 21,000. That is nothing but 7,000 into 9, 7,000 into 3. Less exempt under section 10 subsection 23A.
Sir,
Sir,
HRA received is 5,000.
HRA is 5,000.
Sorry, I saw a wrong question. Sorry, 5,000. Yeah, thank you for correcting me. 5,000 into 9, 5,000 into 3. Yeah, thanks for correcting. Okay, 45,000 and 15,000 less exempt under section 10, 23A. Okay, the first is actual HRA received. We all know that it is nothing but whatever I have written it here. Okay, 45,000, 15,000. Rent paid minus 10% of salary. In Hyderabad, he is paying a rent of 7,500. So 7,500 into 9 minus 3,78,000 into 10%, because Hyderabad salary is 3,78,000. Okay, so here it is, I am repeating, 7,500 is the rent paid minus 37,800. Okay, rent paid minus 10% of salary. Whereas in Chennai, it is 10,000 the rent paid for 3 months minus 1,26,000 into 10%. Whereas in Chennai, it will be 10,000 into 3 minus 1,26,000 into 10%. 1,26,000 into 10%. I hope the class understands. Rent paid minus 10% of salary. In Hyderabad, the rent paid is 7,500, and in Hyderabad, he was there for 9 months. After 1st of January, he shifted to Chennai. So in Chennai, 10,000. 50% or 40% of salary, because when he is in Hyderabad, it is 40%. When he is in Chennai, it is 50% of Chennai salary. 50% or 40% of salary. Now, whichever is less is our B. Whichever is less is our B. Minimum of the following 3 things. Okay. In both the cases, mark the minimum. In both the cases, put a box for the minimum. Okay. Here the minimum is 29,700, and whereas in the other one, the minimum is 15,000. In both the case, minimum is. Okay. taxable HRA A minus B. Taxable HRA A, that is rent HRA received minus the amount exempt. So totally it will be again 15,300. This is the taxable HRA. Please check your answer. If you have a doubt, ask me. Sorry.
So that exemption is under 1013A only.
Whenever there is a change in factor, it can be HRA received, rent paid, place of stay, or salary. Whenever there is a change of place, salary per factor, please work out on split off period basis. Split off period means before change and after change. How does it work? Sahadeva gives you the following particulars. Basic pay, DA, 20% of basic pay, of which 70% forms part. HRA, from 1/1/2020, there's a change. He is get an increment of 4,000 in basic pay. So that 10,000 becomes 14,000. Place of residence, Delhi, rent paid 8,000 computed. So there is a change from this date because there is an increment of basic salary, that is 10,000 becomes 14,000. When there is an increment of basic salary, the DA also obviously increase because DA is computed as a percentage of basic salary. The question is yours now. The question is yours.
Sir, doubt, sir.
So tell me.
இது இன்னும் நிறைய டாக்ஸ் வாங்கணும்ட்டு தானே சார் இந்த இதுவே இருக்கு. பட் இன்கிரிமெண்ட் வாங்குறதுக்கு முன்னாடி ஹி இஸ் டாக்ஸ், பட் இன்கிரிமெண்ட் வாங்கினதுக்கு அப்புறம் ஹி இஸ் நாட் டாக்ஸ்.
இன்கிரிமெண்ட் வாங்கினதுக்கு அப்புறம் he is not taxed இல்ல, his exemption is more because of the fact that the other two factors increase. Actually, if I have given 19,212 for example as exemption, even this 2,700 would have got reduced, but I am restricting the exemption to whatever you received. It is like what you got, you spent. How will you pay tax? Very simple logic. What you got, you spend that money for that particular purpose. How will you expect me to pay tax when I don't have the money? இதுதான் logic.
சார் இந்த லாஜிக் வந்து இப்போ ஏப்ரல் டு டிசம்பர் பார்த்தா வாட் ஹி காட் இஸ் லெஸ், பட் ஹி பேஸ் டாக்ஸ் ஃபார் தட், ஹி கெட்ஸ் டாக்ஸ். பட் ஜான் டு மார்ச் பார்த்தா வாட் ஹி காட் இஸ் மோர் தென் தட், மோர் தென் பிஃபோர், but he is not taxed for that because he paid.
How do you say more than before?
Because basic pay increases la.
Basic pay, for this he will pay tax. He is not paying tax only for HRA component. This is not computation of total tax. This is computation of HRA. For HRA, he need not pay tax. But for basic pay increase, he will pay the tax. Wait, we are at the working note level. When we go to the basic pay, we have already seen. We have already seen. Whatever falling under the general category, I will fully tax it. So the basic pay is going to be taxable. Only the HRA for the month of January to March, not taxable.
Sir,
Yeah.
sir, can you tell me the previous sum answer? Actually, my network was lost.
சார் அந்த 4 ஃபேக்டர்ஸ் சொன்னீங்களா அது என்னென்ன சார்?
HRA received, salary, place of pay, rent paid.
Thank you, sir.
Is it okay? Okay. Okay. Right. Going back to your theory notebook. Going back to your theory notebook. So on the partly taxable, partly exempt, first is HRA. The rest are all simple. That's why we'll complete it. Second is children educational allowance. Children educational allowance. Children educational allowance. So this is paid basically to meet the cost of education of children of the employee. Exemption is ₹100 per month per child for maximum of 2 children. Children educational allowance exemption is 100 into 12, 100 per month, 1,200 per child for maximum of 2 children. 2,400 only you can claim. 100 per month per child for maximum of 2 children. Hostel allowance. This is, my dear friends, paid for meeting the hostel expenses of children who are staying in the hostel and studying. For them, exemption is ₹300 per month per child for maximum of 2 children. Exemption is ₹300 per month per child for maximum of 2 children. Same like children education 100 per month per child. So 1,200 for 2 children, 2,400. Hostel allowance 300 into 12, 3,600 per child, and for maximum of 2 children, 7,200. 1980s provision. Do you know what is the cost of LKG education today? And what is the exemption we are giving? 100 per month. இது கொடுக்காம இருக்கலாம். You can say I will not give exemption. It is better not to give the exemption than to give the exemption and insult. I have told many persons, don't claim this. If you claim this only, you will feel low. 100 per month, 1,200. And what is the cost of education? No silence, Samyukta. MOP college pay 100 rupees per month. Your daily petrol expenses that. Okay. So can you imagine 100 rupees per month? You would have seen kids studying in school. Download and the Lay's chips cost is more than this per month. That snack cost is 3 or 4 times more than this. 100 per month per child, and they want to use it as a good family planning promotion exercise for maximum of 2 children. 70s and 80s provision. Once I had an opportunity to talk in the department. I said, don't insult, remove the provision. It's okay. 300 per month for hostel. Per day, I've been no. So I said, fine. We'll pay the tax for the 2,400 and that is easier than to claim this exemption. And from 1970s to 2020, the culture of the country itself has changed. I told them this, that the culture of the country itself has changed to a large extent. What are you talking about for maximum of 2 children? Even if you want to maintain the limit of 100 per month per child, I told them, you can maintain the limit like this. Exemption is rupees 100 per month per child for maximum of 2 children per spouse. So much the culture has changed that you want to maintain the provision as it is. Please change the provision. As usual, they clapped and left it as it is. Okay. So what to do?
இப்போ புரிஞ்சது சார் நம்ம டைனமிக்கான இன்கம் டாக்ஸ். இப்போ புரிஞ்சு சார் how dynamic it is income tax.
No. I'll tell you one thing. Okay. Every act has some. There are inherent criticism of the act is always available, and I am a person who will criticize what is very closer to my heart. As much as it is like teasing you because you are closer to my heart, I'll tease income tax law also because it is closer to my heart. But till it becomes closer to your heart also, you should not tease it. Okay. Uniform / conveyance / traveling allowance. Uniform conveyance traveling allowance. Amount officially spent is exempt. Sir, I am giving you a traveling allowance of 5,000 per month. Last year you have spent 40,000. So I gave you 60,000. You spent 40,000 for your official travel purpose. Remaining 20,000 becomes taxable. Uniform conveyance and traveling allowance. That reminds me, this is the point I missed it out. Okay, here, please go to the fully taxable. Transport allowance is now fully taxable. Transport allowance is now fully taxable. Uniform conveyance and traveling allowance amount fully officially spent, whereas transport allowance that is fully taxable. Traveling, okay, to make you understand the difference. Conveyance within the same city. Nungambakam to Ambattur. Ambattur na Chennai ne ottukala, but still. Nungambakam to Krompet. Nungambakam to somewhere in Fort. Okay, so these are conveyance. Chennai to Bangalore, Chennai to Delhi. Traveling. Coming from home to office, office to home. Actually, in the period, transport allowance should be cut because nobody is traveling, but transporting. Okay, so transport means office to home, home to office. That's the difference. Okay. friends, I have something coming up for you. Okay. You are going to answer question number 7 and 8. Question number 7 is a very challenging question. You have to find the number of split and then answer it. You have to find the number of splits and then answer it, HRA. And question number 8, I want you to tell me what is the total taxable allowance only. Each allowance, DA, fully taxable means what is the amount? Medical allowance, children education allowance. You can see children education allowance, what they have received is 400 per month for 3 children. Per child for that. So 400 into 3 into 12 is received. Less exempt is 100 into 2 into 12. So the remaining becomes taxable. Like that, for each allowance, what is the taxable and its total, and the question number 7. Okay. I am going to give you only a very shorter span of time. I know you can stretch out, etc. By 12 o'clock, you should have texted me the answer. Time now is 10:30. Take your time. It will not, both the questions put together, half an hour it will take. Or 40 minutes, max half an hour. Okay. So before 12 o'clock, please text me the answer or whatever you are getting for both these questions, along with your name probably. I may miss out on the name. So please text me the answer. Meet you in the next class, that is day after tomorrow morning. All the very best, my dear.